it's Adil bringing you a review of US markets from an intermarket analysis perspective. Okay, interesting scenario thus far. Uh, I'll start by saying I've been totally whipsawed with this price action as of late. Over the last 2 weeks, to be honest with you, I mean I've had minus 80 and minus 20 over the last 2 weeks, so probably going to be my first negative month in almost 10 years. But anyway, it's what it is, and trading, we have to respect price action, even though it can be certainly whippy. Okay, that's probably the best way of describing this, whipsaw. Okay, the reason why I say that, obviously NFP, post NFP, we had the US futures markets obviously down quite substantially. Then we erased all the losses on Monday. We obviously pushed higher, and then obviously today we've certainly pushed higher until we reversed everything. So I think it's very important to understand the narrative of what's going on. Okay, so first of all, Friday, and before, obviously, because it's like a story, think of it as some sort of soap opera, especially given the FOM. Well, we got the FOMC minutes tomorrow, and all will be revealed. So think of it as a soap opera, okay? And it's very important that you watch. It's like watching 24. I'm not sure if very many of you are fans of 24. It's basically it comes on Netflix. It's on Sky as well. Basically, it's like a documentary. Not even a documentary. It's a series, drama series. So in order for you to understand what's happening, say in the 15th hour, you need to understand what's happened in the 11th and 10th and the 9th hour. Okay. So it's all about putting the jigsaw pieces together. So let's start looking. Let's go back and look at the narrative. So Friday, the jobs data misses. Okay, markets obviously go into a swoon, sell off. That's initial panic mode, etc. Equity futures sell off. Obviously, the Fed is going to raise rates, and on the with a backdrop of obviously weak jobs. Okay, so equity market sell off. That's the logical approach. Okay, that's what I've been taught in economics. If you have no growth, then how can you sustain yourself, especially from an equity markets perspective? That was fine. That is fine. I mean, obviously I was short, etc., going into the announcement as well, so everything was fine. Okay, so the dollar obviously starts to sell off. Certainly, let's just have a look at this. Okay, so if I go to the US to bring up my dollar chart. Okay, so we had this scenario. We'll bring up a 4-hour chart, it'll be better. Okay, so obviously the dollar itself sold off quite substantially. Going into, well, as soon as that announcement was released, we had this gap down. Let's go to a 60-minute chart, probably better off. Okay, so that's the announcement that we had. Okay, so bear with me. Let's try and break this down. Okay, so Friday the 3rd, here we go. Okay, so you had this gap down the dollar index. Okay, we sold off, and then come the 3rd, we stabilized. Come the obviously 6th, we obviously come the 3rd, we obviously gap lower, stabilized, and obviously come the 6th, the market moves higher. Okay, so weak jobs, obviously weak dollar. Okay, potential pause in a rate hikes. Okay, and that's one of the reasons why the dollar obviously fell. Then we come into a Monday. Okay, and the markets reverse everything, or reverse all losses. Okay, on the expectations or thought process of so either it was 231, the market sell off based on weak jobs data on the backdrop of rate hikes, and obviously that's a negative. It's not a Goldilocks scenario at all. Obviously it's the opposite, so therefore equity market sell off. But that wasn't the case, because European markets shrugged that off as well. Your US markets shrugged that off, and the market started to move higher, which was very baffling and very surprising, given the fact that we had a lot of technical damage done in the futures market. Then we on the Monday, we had some economic data that came out of the US. Overall, from my perspective and the analyst perspective, there was nothing there that really dissuaded or prevented you from holding the opinion that the markets are obviously the economic data that was that came out on Friday was was unjustified or was an anomaly. Okay, so on Monday we had the market services PMI that came in slightly better than expected. The PMI composite came in slightly better than expected. Okay, and the most important aspect of that was the non-manufacturing PMI that basically came in line, wasn't as worse than expected, although the labour market conditions did come in worse than expected. So that sort of laid the fears of the, or basically supported the argument that the Friday's jobs data was an anomaly, and we shouldn't really emphasise one piece of data. And then we had several Fed members coming out with dovish statements and talk of a potential pause in rate hikes, etc. I mean, even today we had a Fed member, Mr. Cortoloretta, state that we may well have to postpone all rate hikes till June 2016, and there may well be a possibility of QE4 coming back as well. That's how ridiculous it's become. Okay, so it's all about being afraid, and they don't want the stock market from going lower. So Monday, obviously, that allayed those fears. Therefore, the dollar started to pick up, as you can see here. It moved higher, and today, with it being the Tuesday, the 7th of April, we had the economic data that came out. I mean, we had in terms of the US, I'm not going to go to touch the European market, but basically we had, in terms of the US, we had the Red Book Index come out better than expected, the economic optimism data come out better than expected, JOLTS came out better than expected. So therefore, it's negated all of basically it's negated all the move from the NFP. I mean, if you look at the dollar index now, post NFP, obviously we gap lower, and then we gap lower again on the 6th, given the fact that obviously the labour market conditions, etc., so on and so forth. So then we obviously reversed everything, as you can see here. We gap lower on a Monday, given the fact that NFP obviously was dominating the dominant theme. Then we got the economic data on the 6th, or Monday, should I say, that wasn't as bad as everybody expected, etc. And then obviously we started to reverse, and then we get dovish statements and so on and so forth, and then all of a sudden the markets state, okay, maybe there may well be a possibility of rate hikes still going on in, say, in June or even September. And then obviously even though we had Mr. Cortoloretta stating that June 2016 and so on and so forth, even though they were dovish, the dollar itself has gone up and moved higher and closed the gap. So it's very baffling right now. Okay, very, very baffling. That's all I can say. That's the only way to explain it. Although the US data itself, like I said, if you look at the actual economic data that's come out, you can clearly see here that it basically alleviates the concerns with regards to the NFP, and the NFP being an outlier. So you can see the JOLTS coming stronger, the economic optimism comes in stronger, Red Book comes in stronger, and then obviously we had European data as well that came in stronger than expected in terms of UK and Germany, although Europe was relatively weak. Okay, so that certainly is an interesting insight. So that's basically where we find ourselves with regards to the market. So basically what's happened now is that the NFP has been totally negated. So therefore it's an anomaly, we ignore it, okay, because the economic data that's come thereafter has totally negated it, or basically overrided it, okay. So given the fact that we are now back into the concept or understanding that the NFP was an anomaly, and the dollar obviously has risen back to where it was before, hence the reason why the US market sold off late into the day, okay, because a stronger dollar means obviously rate hikes coming is negative for equity markets, and the market sells off. That's the thought process, okay, that's the thought process. So that's basically where we are, okay, that's the situation that we find ourselves in, and that's where the market is at this very juncture, okay. So now that we've negated all of NFP, we totally ignore NFP now, and from my perspective, I'm going to presume that rate hikes are back on for June, and obviously each data point that comes in, then we have to be dictated by that. And right now the equity markets certainly have moved way ahead of themselves, and that's why we had a correction today. So obviously it's all about the rate hikes now. So if we get news that supports a rate hike coming sooner than expected, expect the equity market to sell off. If we get data that supports the rate hikes being postponed, and the equity markets start to rally. It's a strange world that we are. A very, very strange world, and very, very strange market. That's the only thing I can say. Okay, that's the situation that we find ourselves in. Okay, so that's the dollar index, and that's the narrative behind that, and that's why the markets have been very emotive, very irrational, very strange to read from my perspective anyway. Okay, very baffling. Now we go into FOMC minutes, and it'll be interesting to see what the Fed has to say. Does she maintain her credibility? Does she downplay NFP? Is she concerned about NFP? Are the members concerned about a rising dollar, and so on and so forth? So it's going to be very interesting as to what happens, and that will dictate obviously what will happen to the markets as well. Now let's have a look at the actual technical picture now that I've explained and give you an insight with regards to the US market. Okay, so let's start with the S&P 500 first and foremost. Okay, so let's go to a daily chart first of all. Daily chart still stuck at this resistance level, and that's the one that's being held for now. Even though we have the bulls raging and ranting and so on and so forth, one must remember that this still is a lower high. We've had a lower high here, and this may well be another lower high. So regardless of what's happened in the last few days, we need to look at the larger macro perspective. The weekly chart still is a bear flag. We're still consolidating in that red candle, so therefore one should not get too excited. And the 60-minute chart, I mean, what is interesting though on the daily chart is this candle here. Okay, this candle had very impressive volume. Okay, that's what I'm focusing on. This candle had very impressive volume on the 6th of April. Okay, so that basically tells me that the bulls certainly are strong here. Whether they interpret that as a weaker dollar policy going forward or rate hikes being postponed, and the economic data is basically coming in line. It's a Goldilocks scenario. If you have rate hikes postponed plus economic data coming in line, they're playing the growth story in advance. Okay, front running the potential growth story. So this high volume bar on the 6th of April will dictate. If that 6th of April candle gets negated, then I will go into the more than happy to go into the bearish camp. But for now, I must respect that, because that's the real reaction post NFP, and that's what counts. Okay, that will dictate the price action in the US markets in the foreseeable future. Okay, so 60-minute chart, again horizontal resistance held at 2090, so that must be respected for now. Obviously we flushed from the 60-minute chart. We certainly have flushed, and the 2090 will hold as pivot resistance for the interim. Now the 10-minute chart for the S&P 500, we are coming into support at 2075. That will be good support for the S&P 500 at 2075. We currently are on the 2075 on the futures market, so that certainly is worth noting. And then obviously we have this diagonal trend line support here as well on 200 MA at 2073. If that fails to hold, previous resistance equals support at 2071. So 2075 and 2071 certainly is a key area for the S&P 500, and that's where I'll be looking for a bounce. Now if I use my Fibonacci retracement tool as well, take the pivot high to pivot low to pivot high, and that obviously falls in between the 50% fib level. Okay, so that certainly is worth noting. Okay, that's the situation that we find ourselves in on the S&P 500. Now if I just corroborate that with the IWM and the IWN, it's always important, and that's basically how I operate. It's always cross-reference. So the IWM, which is Russell, okay, let's start by looking at the daily chart. Okay, so regardless of what's happening in the S&P 500, this candle here, which is obviously with high volume and increased volume, still has the bear flag formation. Okay, still has the bear flag formation. Now given the price action today on the Russell, it's still an inside bar because this green bar does definitely dictate for the interim. Although having said that, it still is in this key, or within this key realm, below this key candle, and until that gets negated, I mean it's very hard to fall into the bullish camp. It certainly is bearish for now on the IWM on the daily chart. 60-minute candle, we still are in this rising contracting wedge pattern, so this certainly needs to be respected and observed for now. You do have this on-fill gap that certainly needs to close, so that needs to be focused on as well. 10-minute chart, we obviously have flushed after holding the level there. This IHS is complete, so let me get rid of this now, and let's just see where we are. Okay, here we go. Okie dokie, so here we go. Okay, so that's basically where we are, and just drawing in my lines for the day. Right. So we certainly are coming into support. Obviously, we pierced the 200 MA. So certainly supporting for the Russell for now, as you can see. And on the 10-minute, on the 60-minute, but the daily is an inside bar, so we respect that for now. So certainly looking for a bounce on the IWM. Let's corroborate that now, or cross-reference that with the IWN. The daily chart has negated the red candle, and we have closed the gap, and that itself certainly needs to be respected for now. I'm going to a 60-minute chart. As you can see, that gap level has held. We do have this diagonal support here. There we go. You got a key trend line there. Key trend line here. Okay. That's basically where we are from that perspective. Okay, so just respecting that for now. So again, IWN into support in the interim. Okay. Update this as well. Okay, okay, so okay, so you are coming into support as well for the IWN, which is previous resistance equals support there, and that's basically where we find ourselves. Okay, so you've obviously flushed here, and you had this H&S formation here on the IWN. Okay, so this, and obviously going lower. Okay, get rid of this and this. Just drawing in my trend lines. Obviously that has been respected for now, and basically indicating a potential bounce on the IWN as well. Therefore the 2075 or 2070, 2075 to 2070 certainly will be a solid level of support for the S&P 500. Okay, now let's move on to the Dow, and it'll be interesting to see exactly what's happening there. So Dow Transport's just about holding the key support level here. Certainly vulnerable to a sell-off at any time, so one needs to be aware of that. All to the Dow 30 now. That is a very feeble bounce, by the way. Okay, a topping tail in the Dow, so it certainly needs to be respected with regards to that. And it still is a lower high, so regardless of how bullish you are, you must bear that in mind. We obviously closed that gap. As soon as we closed the gap, we've been very weak ever since on the Dow itself. Horizontal resistance there, obviously horizontal support here. Go to a 10-minute chart. Okay, so we're into this region here. Okie dokie, and again we are into support for the Dow Industrials. Okay, ever since we closed that gap level was solid resistance on the Dow, and we are looking for a potential reversal now. Okie dokie, this is basically where we find ourselves. Okay, so the way in which this is playing out on the Dow, Just be aware of this pattern here, folks. Okay, so you have the head, then you're looking for a potential bounce tomorrow, right shoulder, then potential H&S formation. Reversal certainly is on the cards. Okay, just bear that in mind. You have a horizontal support around the 17,820 level. I mean, we currently are at the 17,830. Sorry, present on the Dow, we are currently at the 17,870 level. Sorry. So 17,870 is support. Obviously, if that breaches 17,830 and previous resistance equals support 17,820, all come into play. So that certainly needs to be respected for the interim. Okay, so the Dow and the Dow Transport certainly are into support. So therefore, one would assume or presume that the market certainly is due for a bounce. Now, let's have a look at the Nasdaq now. Bring up the Nasdaq. Here we go. Okay, so let's go to our daily chart of the Nasdaq. Daily chart of the Nasdaq, a topping tail, so that certainly needs to be respected. Obviously, we held this resistance level here, so therefore that needs to be respected too. The fib retracement on the daily chart is around 38 to 50%, so that needs to be respected too. A 60-minute candle. Although having said that, if I go back to my daily chart, one needs to be aware that this is obviously a bullish engulfing candle, and the volume did drop off the next day, so we're just consolidating, and this pivot support at 40 to 80 certainly has held, and that certainly needs to be respected for the interim. Okay, but having said that, also remember it's a double top. This is a lower high, and the lower high certainly is being obviously held for now. Okay, 60-minute chart. Obviously, ever since we closed that gap which was there, it's obviously found resistance. We have broken out of the this downward sloping trend line, or downward sloping wedge formation, you call it what you want. Okay, so again you're looking for a potential pullback. We are coming into the 200 MA, which is key support for the Nasdaq. Okay, so that certainly needs to be respected as well. Okie dokie, right, so the 200 MA will be at a solid support of 43.40. we are there at this very juncture, and we'll see exactly how the market plays out from that perspective. Obviously, if that level breaks, then you have this previous resistance equals support here. Okay, and that gap level obviously has closed, and we are looking for a potential reversal now. Okay, nothing else that I can really, I mean, other than the fact that you had this H&S formation, which was probably around this region here. Here you go. Okay, so that certainly was respected. Obviously, we broke out that wedge and we go lower now. Yeah, and that's exactly what occurred. Okay, so this pivot bottom support around the 4280 obviously will hold for now, and this 4340 level will hold also. Okay, with regards to the Nasdaq, so that certainly is into support for the interim. Okay, now let's cross-reference that with the biotechs. The biotechs daily chart certainly is holding, although like I have said, and this is one of the reasons why I was bearish, you do have a H and S formation here. Okay, so don't get too bullish on the actual tech stock or tech sector. Go to our 60-minute chart. Again, it's still pretty feeble. The bounce itself, obviously the 200 MA held, and the market obviously reversed. A very feeble bounce, if that. And 10-minute chart certainly is into support for the interim, so one needs to respect that. You do have previous resistance equals support here, so certainly respect that for now also. Okay, so obviously you've got this gap level here, and we are looking for a potential move higher. Okie dokie, so you have this diagonal trend line which will act as support as well, so we have to observe those two levels, but the biotechs certainly are into support and looking for a potential thrust higher on the 10-minute chart. Okay, the next one is the semicons. If I just bring up the semiconductors, daily chart itself still remains very weak, hence the reason why I was very surprised as to the rally over the last few days, but that's the market for you. It certainly baffles you, and certainly confuses you and bewilders you. Okay, so As you can see here, everything is holding technically perfect for now. The bears certainly are in control regardless of this dead cat bounce, and we are we held a 61 resistance today again. Even though we had this so-called bullish scenario, the market's still in terms of the semicon still very weak. Okay, daily chart, as you can see, very bearish, lower high. 60-minute chart at the moment, again we failed to even hold this bullish engulfing candle, which was earlier in the day, so again showing weakness. The 10-minute chart again showing weakness, although we are into support for now, so that's something that we're going to respect for now. With regards to support, okay, that's where we are there, and there is this key level here that we must hold for the interim. Okay, so those two zones are now, obviously we are coming into horizontal support as well. So again, this is another index that's indicating support, therefore that confirms the thesis with regards to the Nasdaq's bounce. Okay, therefore we are looking for the Nasdaq to bounce, and that would presume then that the US markets will bounce as well. Okay, and that's basically the wrap, folks. Okay, for now, so looking for a potential bounce, although I wouldn't get too bullish, especially given the fact that the narrative I explained at the outset, the US markets obviously sold off on Friday on the scenario, the situation that we're raising rates, plus we have weak jobs data. So therefore it's not a Goldilocks scenario, and now the markets obviously have realized that the NFP was an anomaly, and the economic data that's come out thereafter has negated the NFP, or the weak NFP number, and basically puts the rate hike back on the table. And whether it is delayed from June or postponed until September, it's going to be inevitable, and therefore the US markets have obviously sold off today, going into FOMC minutes, given the fact that they're spooked with regards to the uncertainty of the FOMC minutes, plus the situation with regards to the dollar moving higher and negating the NFP move. Okay, so keep an eye on the dollar index. That will be very important going into tomorrow, and obviously the uncertainty from the FOMC minutes as well will certainly dictate. And with regards to the markets, you do have some European data coming out as well, so that will be interesting as to which way they move, and also the Asian markets as well. I mean, the Asian markets was very stellar overnight. Let me just bring this up. Okay, I'm not sure why it's not loading at the moment, but yes, the Asian markets were certainly stellar overnight, and that certainly needs to be respected as well. So again, Asian markets will dictate, and the dollar will certainly dictate as well as to which way this market moves. Okay, folks, so risk on, risk off, wax on, wax off. Goodbye now.